back, everyone. We're Simply Bitcoin. We break down the news, the daily fail, meme review, software releases, hardware releases, and the plebsites. Joining us today for the weekend recap, we've got fellow Bitcoiner, Toxicat. How's it going, my dude?
What up, everybody?
Awesome. And we've got return Sunday co-host with us. We've got Optimus Fields, My Living Truth. How you doing?
What's up, Phil? What's up, Nico? What's up, Toxie Maxi Cat? Shouts out to Frito2X. I got the new MF Doom mask on. It's actually metal. It's not that comfortable, but we're doing it for the culture. So shouts out to Frito. He gave us an Amazon gift card, and this is what you bought, bro.
He's awesome. All right, this is great. Great way to kick off the weekend recap. All right, Nico, let's dive into the numbers.
Number time. Brought to you by Nodl. They make some of the best Bitcoin nodes, like the Nodl One. Run your own version of Bitcoin Core, the Lightning Network, Whirlpool, and Dojo, all in the comfort of your own home. Remember, guys, if you don't run your own Bitcoin node like the Nodl, you're using someone else's. So get yourself a Nodl today. Nodl.eu.
At the time of this recording, the block height is 742,478. The Bitcoin price, 21,015. Chain rewrite days, 783. Total public Lightning capacity, 3,919.36. Moscow time 47:59. Blocks to the halvening 97,522. And the Samurai Whirlpool unspent capacity. Samurai Whirlpool is a coin join or collaborative spend. It is not a mixing service. And the unspent capacity for that pool is 4,761.17. Nico, the weekend numbers look a lot like the weekday numbers, look a lot like the numbers we've been saying every day. Again.
Yeah. Is Bitcoin the new stablecoin at 20K? I don't know.
I can't believe you just said that.
Opti, you guys know the deal. If you don't, Opti, the king of mayhem behind the Simply Bitcoin Twitter account, is the host of the numbers on every Sunday episode. We have no idea what he's going to cover. Opti, it's all yours.
What's up, guys? What's up? You're stuck with me every Monday, and I'm here. All right, guys. So I have been seeing a really cool, narrative theme. We've been covering it already. We covered it, I believe it was on the Saturday show. But as you see on the screen, guys, I got the Glassnode alerts up here. We are seeing more pleb stacking because we have an all-time high of number of addresses with UTXOs holding 1 million sats or more. And so we have an all-time high of 10,291,000 plus UTXOs with 1 million sats connected to it. So what does this tell us? It tells us that people are stacking. We have the plebs out there stacking. Everyone is buying Bitcoin at these cheap prices. We've gone over this. And as well, we have an all-time high in 10 million sats connected to Bitcoin addresses. So what does that tell you? It tells you that not only are plebs stacking, but we have people with some significant means of wealth buying Bitcoin. So it's not just the average pleb out there buying Bitcoin, it's the rich pleb out there buying Bitcoin. And personally, this is a theme that I would love to see continue because, as we say all the time, it's all cool to see governments and countries adopt Bitcoin on a nation state level, on a federal level. But what we really love here is the individual peaceful revolution of Bitcoin. And this is just showing that people are out there stacking. But we got another metric that came in over the weekend, and it's the number of addresses holding one full Bitcoin or more has reached an all-time high of 869,949. So what does this tell us? It's telling me personally that we have big money coming in, guys. Not just your average pleb, not just your rich pleb out there, but as we've always been saying, or not we particular, but as Bitcoin Twitter always says, the institutional money is coming in. And guys, we are seeing big buys coming in. We're seeing new all-time highs of 1 Bitcoin connected to UTXOs or more. And guys, if you don't remember what just happened, we had a spot short Bitcoin ETF that just got released. So you know that Gary Gensler and Wall Street and his boys are trying to get in on Bitcoin. So they're crashing the price. They're swooping up the coin, and you can see it on the on-chain metrics, guys. People are out there stacking. The plebs are stacking. Big boys are stacking. Cheap Bitcoin means more Bitcoin accumulation, guys. So just continue to stack. Doesn't change your thesis as the pleb, but just know there are people out there accumulating Bitcoin. So whoever's selling knows someone is buying. And what does the smart money know that you don't know? HODL Bitcoin, because it's going to go up. Nico, Phil, Toxie, what do you think?
Yeah, man. I think we covered this on Saturday. Yeah, the thing. More people continue to stack Bitcoin. That's the signal right there. Number of whole coiners continues to go up, right? Without any type of wealth redistribution mechanism that requires coercion. It's beautiful to see, and people are obviously stacking the dip. I just don't think it's feasible because of the fees to have exchange addresses have a million addresses. Of course, I'm sure they have a lot, right? Every exchange, when you deposit onto exchange, they do give you a unique address per person, right? But I could assume, you can make a good assumption that the increase in numbers that hold a specific amount of Bitcoin, you could definitely make a good bet that a lot of that are individuals stacking the corn. So very, very bullish overall. Anyways, Phil, what are your thoughts?
Yeah, people are going to hate me for saying this, but in the 2018-2019 bear market, I remember on our trip down from 20K to 10K to sub 10K, all I kept seeing were the cheerleaders and the institutions are coming. The institutional money's almost here. It's here. It's here. Listen, let me tell you something. The institutional money was there then too. Okay. That didn't stop Bitcoin from breaking the 10K mark, which was never going to break. Okay. It also broke the 6K mark, which it was never going to break. Okay. So the institutional money is already here. They have been here. What, unfortunately, the market, right, is at the end of the day ruled by humans. Yes, there are some algorithms at play, but at the end, it's still humans kind of like picking what price points they want, or maybe they're going by whatever the algo suggests, but still it was a human being that programmed the algo. Anyways, my point being, it's human beings, it's emotions, it's a market, okay? And everyone has different ideas, right? When somebody buys Bitcoin, it's because they think it's going to go up from this point in terms of fiat terms. And when they sell it, it's because they believe the better position is cash, and they believe that Bitcoin's fiat value is going to go down, right? That's all it is. And all of that is based on a bunch of arbitrary stuff that feeds into our emotions. So all I could say is, to Optimus' point, it's about the hodler, right? And the hodler, all we're seeing is cheaper sats. So I get the whole, you know what I mean? We're seeing more addresses, but you know what? Right now, there's just a lot of emotions in the market. There's a lot of bad news. So I think that people just need to not pay attention to the noise. And if you can get your cheaper sats, get your cheaper sats.
Absolutely. Toxicat, what's up, dude?
Well, that 1 million is actually the threshold that one of the thresholds that Swan actually uses when you auto withdrawal. So once it gets to 1 million sats, it automatically withdraws to your keys. So that could be that Swan with, Corey going out there and scooping up everybody from all these DeFi shitcoin casino lending programs. It could be because he's out there recruiting, and that's probably one of the reasons why we're getting that at that threshold, so many different addresses with that, with that denomination in it. Absolutely. Not to mention what Phil said, with the greater macro scale of the economic place, like cash is the place to be for a lot of people, because, those who don't understand Bitcoin don't understand that Bitcoin is actually the place to be. So
100%.
My cash position.
For anyone
that's what they get afraid of. Sorry, Nico.
No, sorry, Phil. For anyone who doesn't know the convertibility, 1 million sats is around it's 0.01 Bitcoin. for anyone who's lost in translation or lost in the sauce. Lost in the sauce. Anyways, so it's time for
The Daily Fail. Brought to you by Swan. Check them out, swanbitcoin.com. That's right. They've got automated Bitcoin savings plans, instant purchases. They've got an app coming out. It is a stacking website by fellow plebs. The best way to DCA. Do it today. The link is down below.
Phil.
All right, here we go.
What is talk to us about BlockFi? What's going on with them?
All right, so hold on. Obviously, Nico, I'm first. I have to do some education, right? We have to do some education because we have to learn about what we're talking about before we explain the giant shit show. Okay, that is complete. That's totally unraveling. Anyways, okay. So look, before we dive into BlockFi, let's quickly just, for the people that need to know, rehypothecation. What is rehypothecation? These are the key takeaways of rehypothecation. Rehypothecation occurs when the lender uses its rights to the collateral to participate in its own transactions, often with the hopes of financial gain. Hypothecation occurs when a borrower promises the right to an asset as a form of collateral in exchange for funds. Rehypothecation was commonplace practice. This is part of the signal until 2007. But hedge funds became much more wary about it in the wake of the Lehman Brothers collapse and the subsequent credit crunch, in brackets, the mortgage meltdown of 2008, 2009. Okay, so rehypothecation, maybe not so good. Maybe it's not the best thing in the world. All right. Maybe you don't want to do that with your Bitcoin. But anyways, in 2019, BlockFi, right? The grass was green. Everything was going to start going great. We were finally starting to get out of the bear market. Things are looking up. So we can take some risk on. Anyways, let's dive into this because I thought that this was pretty funny that this was something that they published. An introduction to rehypothecation with cryptocurrency. So think of what I just read to you, right? We already understand that it's bad and it has inherent risks, and it leads to institutions essentially taking your assets and reusing them without your permission. I mean, don't get me wrong. Indeed, you signed your life away, when you signed that giant EULA form, but really, if they actually told you this was going to happen, you would have said no. But, you wanted the 6%, you wanted the 7%, right? My yield. I got it. The yield. All right, let's dive into this. How can we help Bitcoin and blockchain technology win market share? We can develop scalable, trustworthy lending systems to support growth of the asset class as part of that journey. We will need to use rehypothecation. That's right, guys. That's how this grows. Right? Think of how amazing everything became because of rehypothecation. All those mortgages that went belly up, all of those credit default swaps that failed. This was fantastic. Anyways, here we go. The BlockFi interest account has been embraced by many in the crypto community. Even with the outpouring of support, some did not like the risks associated with the product. So we decided to put lipstick on a pig. Our new product does carry risk, which we thoroughly disclose and thoughtfully manage. We think it's important for people to know and understand the realities of rehypothecation and its role as a financial tool to help grow the cryptocurrency industry. That's right. In a new industry where they can fleece noobs, this is a tool that can help it grow. But in the traditional markets, the people that are the hedge funds are staying away from it because of the problems that it causes. Anyways, one concern is that rehypothecation creates more than 21 million Bitcoin. I thought that this was hilarious. All of a sudden they start mentioning Bitcoin. It's like, what are you talking about? Nobody's under this misconception. We know that you can't make more Bitcoin. Like, why are you bringing Bitcoin into this? Anyways, in our view, without a major change to the current implementation of Bitcoin, you can't create more than 21 million Bitcoin. Okay, well, anyways, this has nothing to do with it. We know that that's not what you're doing. We're afraid you're going to make a whole bunch of fake Bitcoin. Okay, and a whole bunch of other crap. Anyways, so here we go. These are the essentially the 5 takeaways, right, of rehypothecation. So, securities rehypothecation generally lowers the cost for consumer access to products. It's a really good selling point. Rehypothecation promotes market liquidity and price discovery by enabling market participants to express a multitude of views. Keep in mind, Bitcoin was already 10 years old before this rehypothecation started taking place. Apparently, market discovery was happening without scamming a bunch of noobs for yield. I don't know how, but it was just happening. Must have been the free market craziness. With Bitcoin, settlement isn't instant, but we do have a settlement layer that is much faster when compared to traditional markets. What? Does this have to do with rehypothecation? This has nothing to do with this. Our goal as an industry is to effectively compete with the traditional financial system, even though they've already gotten rid of the rehypothecation or attempted to.
My dude, you missed the best one.
Wait, which one you thought was the best?
Rehypothecation was not responsible for the financial crisis.
I'm sorry, I didn't even see that. I'm sorry. That's great. I outlined it and I didn't even mention it. That's right. It was not responsible for the financial crisis, but we just read in the previous point that hedge funds were weary from the Lehman collapse. Thank you, Nico. Thank you, Toxicat.
Misinformation, Phil. You're misinformation over here.
That's right. Hey, listen, man. Someone's got to do it. Someone's got to do it. Okay, here we go. So here we go. This part I thought was funny. They're going to create a more equitable global financial system for equity, debt, and yield. We believe that we should welcome new crypto users with an educational and inspirational tone about what is happening in the crypto market and why it's good for humanity globally. Keep in mind, this has nothing to do with taking your assets and reusing them on their own terms. This is just a whole load of nonsense. Total load of nonsense, okay? And here we go. Valentine's Day, 2022. BlockFi lied to retail. This right here, if you didn't already see the red flags with this service, possibly when this came out, this might have told you something, okay? This might have told you something. Because check this out. Approximately 24% of institutional crypto asset loans made in 2019 were over-collateralized. In 2020, approximately 16% were over-collateralized. In 2021, 17% were over-collateralized. According to the regulator, BlockFi made no distinction between clients and its own assets when running its business. BlockFi pooled the crypto assets it borrowed and commingled and rehypothecated these crypto assets received from investors in the BIA with BlockFi's other assets. And BIA stands for BlockFi Investment Accounts, including collateral received from institutional borrowers. BlockFi had made risky bets with the pool of money in order to fund the interest rates it promised investors. As BlockFi took ownership of the loan crypto assets from investors in the BlockFi interest accounts, it used the commingled assets to, among other things, make loans to institutional and retail borrowers, stake shitcoin assets, and purchase shitcoin asset trust shares and interests in private funds. I don't know if anybody okayed all of this with their money. I don't think they did. So, you say, Phil, why do I care about this? Why do I care that this company's doing this? Because my yield, right? I get this yield. Well, Corey dropped this thread and that was outlining very well done, the CoinDesk article about what's happening with BlockFi, because apparently they need some money. And apparently Sam Blankman-Fried? Sam Blankman-Fried is essentially offering a $250 million credit facility. But it does come with some strings attached. Anyways, let's dive into this thread. Morgan Creek at Mark Yusko, which for the people who don't know who Mark is, right? Mark is the CEO and founder of Morgan Creek Capital Management, which holds a big chunk of BlockFi. Anyways, Mark Yusko and at Pompliano attempting at BlockFi rescue that wouldn't wipe out all investor equity to zero as the FTX offer can. See, this is the key, right? If Sam gets his way He freaking wrecks these guys. Anyways, let's go. Cryptocurrency investment firm Morgan Creek Digital is attempting to raise $250 million from investors to purchase a majority stake in crypto lender BlockFi. A leaked investor call from Tuesday reveals Morgan Creek's plan to rapidly assemble an equity offer was hatched in response to crypto exchange FTX's Tuesday morning announcement that it would extend a $250 million credit line to BlockFi. Morgan Creek declined to comment. A person with knowledge of the effort said there's multiple venture capital funds that are exploring ways to provide equity financing to BlockFi as the lender struggles to stay afloat. At stake is the ability of BlockFi's existing shareholders, including longtime backer Morgan Creek, in brackets, Mark Yusko, Anthony Pompliano, and Jason Williams, who's not being mentioned here, but he is also an investor in Morgan Creek. Anyways, managing partner Mark Yusko said on the leaked call, according to Yusko, the FTX credit line proposal had a catch for BlockFi's existing shareholders. It gave FTX the option to buy BlockFi at essentially zero. If FTX went to exercise the option, it would effectively wipe out all of BlockFi's existing equity shareholders, including management and employees with stock options, as well as the equity investors in the company's previous venture rounds. Ugh. However, Yusko said on the leaked call that BlockFi founders Zach Prince and Flory Marquez had a valid reason for preliminarily accepting the terms. Of the several emergency financing offers BlockFi received, FTX's was the only one that would not subordinate client assets to the rescuer. In other words, unless BlockFi went with FTX, its depositors would have had to wait in line behind the new lender to be repaid. Additionally, BlockFi had not received any equity financing options at that stage. Oh, it's brutal. Anyways, Yusko did not identify any of the other firms that proposed bailout packages for BlockFi. I'm going to give my opinion. I don't think there were, because these guys are rushing, looking for people to invest in this. Anyways, BlockFi CEO Prince tweeted on June 21st that the company had signed a preliminary term sheet with FTX. Yusko told investors on the leak call that day that FTX and BlockFi were probably 3 days away from signing a definitive agreement. We're still negotiating the terms of the deal. We can't share more information at this time, a BlockFi spokesperson told CoinDesk on Saturday. We anticipate sharing more on the terms of the deal with the public at a later date. Now, there hasn't been anything that actually came out about this since then, okay? But I can tell you this. At this point, okay, this is bad, because if Mark Yusko and Anthony Pompliano, if they can't find someone else to come up with the $250 million because of the ridiculousness that they pulled with people's money, this is going to put everything in Sam's corner. Okay. Now, don't get me wrong. To a certain extent, it's not the worst thing in the world for the people that actually had their money on that platform, because if you understood that thread, you understood that under, at least this is what I understood, but under the FTX deal, or whatever they're called, it's the people that actually put their money on that platform would be able to get their funds back. And it's all of the shareholders and equity holders that would be wiped out. So this becomes kind of like a catch-22. Anyways, don't get me wrong. This goes back to the really simple point that we harp on all the time, which makes it even more pathetic. Not your keys, not your coin. I mean, was this really worth a 6% yield? I mean, look, even if you do get your funds back, is this worth the headache? Because I could tell you right away from my experience, because I did do Celsius back in 2019 when it first started. Before they had their shitcoin, I was like, why shouldn't I earn yield on my Bitcoin? You know? And you know what happens psychologically? You leave it there, you feel secure, and you say to yourself, well, since this is safe, I'm going to continue to add more, and I'm going to continue to add more. And before you know it, you have pretty much over-leveraged yourself, and you don't even realize what you've done, okay? Obviously, I pulled it out a long time ago, and I haven't dealt with that shit in a very long time, but I fooled myself. So that's unfortunately what happens to a lot of people with these things, because it gets very comforting, right? You sit there, you do nothing, you get paid. Well, this is the other side of the coin. They're taking your assets, they're doing whatever they want with them, and then look, you get stuck in the middle. You are the bag holder. We are the bag holders. Anyways, Nico.
Yeah, dude. It's more a continuation of the old system, right? It's not leveraging the properties of Bitcoin. It's not leveraging multi-sig. Unchained Capital does something very similar, right? Or not. They don't. What they do is that they provide you cash if you collateralize with Bitcoin, but the thing is, they don't rehypothecate it. If you take a look at your Unchained Capital loan, it sits in the same address to which you deposited to, and of course, it's using the multi-sig solution that Bitcoin provides. Now, is it 100% safe? No, right? Because you're not holding the controlling number of keys, right? In their case, they use 2 of 3. You're still trusting in the third party and Unchained to play by the rules, but you could still see if your Bitcoin is there or not, right? In the case of BlockFi, essentially what they did, and Celsius did the same thing, right? They took people's money, they promised you 6%, they bet that they could outperform that 6% with your money, right? And now when the market crashed, and they're panicking because they know they can't perform, they can't give you that 6% return, they shut off withdrawals. We saw this with Babel. We saw this with Three Arrows, or I don't know if they're a lending company, but same thing. And we saw this with BlockFi. This is a domino. This is a cascade, right? And they all did the same thing. They took other people's money, they gambled with it, and now when other people are asking for their money back, they don't have it to give. This is exactly what that famous Ponzi artist in New York that got like 100-something years. It was like the biggest. Bernie Madoff. So he did the same thing.
Madoff.
He took people's money. He offered you a return, but he couldn't provide it. And of course, they're betting on the moon of Bitcoin, right? Because they're like, oh, Bitcoin's going to go up forever. We're going to be able to offer these little returns. And if you notice, their returns shrunk and shrunk and shrunk over time. Why? Because they knew they couldn't give it back to you. Now, is it worth it for you to give up control of your keys for a 6% return? You might come to that conclusion. Maybe you need the cash, right? Maybe you want to gamble a little bit, right? Why use something that rehypothecates your wealth? Doesn't make sense to me, right? So these are the consequences. Now, here's the thing. What I would like to happen, and this is going to sound very, very intense and like very brutal to some people that use the platform, I want it to collapse. I want BlockFi to collapse. I want Celsius to collapse. And the reason that I want that is, again, these companies collapse, people learn their lessons, and it won't happen again. If they get bailed out, whether it's Celsius, I think Celsius got an offer by Goldman, I think it was. It was some crazy thing.
That's right. To buy the distressed assets.
So again, if these companies get bailed out, what you're doing is you're incentivizing for it to happen again. Because as in the traditional financial system in 2008, the reason that they were so risky is because they knew that the Fed was the lender of last resort. Now, I'm glad it's the private market. I'm glad it's not a government institution, thank God. But I guarantee you 10, 15 years fast forward, and that government is going to have to bail them out because the political pressure is going to be so intense. If they collapse, no one is going to do it again. Companies are not going to be able to raise money with that same business model because lenders or people that invest in those companies will say, hey, that's not a good business model. Look what happened last time to Celsius and BlockFi when there was a market downturn, right? So I know it sounds harsh, specifically to people that have their money on exchange, and I hope you guys get your money back, but also understand, right, that if Pomp and Morgan Creek Digital and Sam Bankman, Sam Bankman-Fried step in to bail out these companies, understand that, again, you're incentivizing bad behavior, right? There's no lesson learned, so to speak. Now, in terms of whether I would want Pomp to take it over and then make his... By the way, he's not doing this out of the goodness of his heart. Pomp is an investor in BlockFi. And he also, I'm not even getting into that, but let's just say predominant podcasters shilled the F out of this service without getting into the specifics of what the downsides were, right? So, yeah, man, again, this is pure capitalism. This is the free market. There is no bailout of last resort. There is no Fed that you can cry to. I'm glad that it's free market participants that have made their own money on their own accord, right? And it's not, a government institution. But I guarantee you, this is just happening right now. I guarantee you that it will become a government institution in the future. Take possession of your own keys. Phil?
I just want to say, technically, a government institution did get screwed with this, because not it with BlockFi specifically, but Celsius, one of the major backers was the Caisse de Dépôt from Quebec, which is the pension, which so it may not be all their money, but they got wrecked, or they're getting wrecked. Anyways, I'm sorry. Continue.
Yeah, no. Look, just to simplify, they took your money because they thought they could give you that 6% return. They couldn't give it to you. They busted. They couldn't outperform, right? And now they don't have the money to give you back, right? And again, there's better ways to do this, as you see with Unchained Capital. There's risks there, and you have to be aware of those risks. But these companies are not using the technology that Bitcoin provides, right? So it's a very, very sad situation. But again, we told you so, because we really did. Anyways, Opti, what are your thoughts?
Well, I don't have much to add because you covered everything basically. But as a toxic Bitcoin maximalist, it gets boring winning all the time when you just do everything from first principles and you realize I shouldn't be lending people my Bitcoin to chase yield. Don't scam yourself out of your own Bitcoin, guys. Don't put your Bitcoin in a position to get rehypothecated. Stay humble, stack sats. You'll be fine. Trust the process.
I got one question. BlockFi, if the rehypothecation wasn't the cause of the financial crisis, why is your rehypothecation the cause of your financial crisis?
Dude, they owned themselves. They're like, oh, it didn't cause it. Fast forward. Oh, crap, we're in trouble. Like, it's like they had to convince themselves that.
And what is it? Alex Mashinsky's his slogan for Celsius was "Banks are not your friend," and now Goldman Sachs is being his friend and offering to bail him out. He's gonna take it,
dude. There's
no way he says no.
What a genius business model. Think about it. And this is exactly what Bernie Madoff did. It's the same exact thing, right? Give me your money. I promise you a 6% return, and then they use your money to trade with it, right?
In some cases, they're not even trading.
Why don't you?
They put their money into shit like UST.
Yeah, why don't you shit?
Why don't you trade yourself? You have a better chance of getting 6%.
We don't advocate for trading on Simply Bitcoin.
Oh man, it's like if you're going to, dude, a 6% return, really giving up your keys in the process. And again, this goes back to people not understanding the power of self-custody, right? If you self-custody, this can't happen to you. In fact, if you die and you didn't tell anybody where your seed is, that thing isn't going to move until the end of time, until they break 256, right? So it's like, man, it's a total clown show. I'm sorry for anybody that got hurt. But anyways, Phil, it's time for
the Daily News.
Brought to you by CryptoCloaks.com. They make some of the best 3D printed Bitcoin merch, like the famous 3D printed Bitcoin grenade toy. It comes in any custom color your heart desires. You want gold? You can get it. No, this is orange. You want Simply Bitcoin orange? You can get it in orange. What about Peter Schiff colors? Yeah, that's right. You can get it in gold. And check out the European store. It's now open. Also, the 3D printed open source node case. Check out CryptoCloaks.com. So in a continuation of total fucking clown world with this downturn in Bitcoin's price, not only did the DeFi lending platforms get totally wrecked, Bitcoin miners are getting totally wrecked as well. And for the same exact reason. they borrowed money. Anyways, total clown show. I read this article and I was shaking my head because the same thing happened in 2018, right? In 2018, essentially what happened was, or better said, 2017, everyone was so pumped. Everyone was like, oh my God, Bitcoin's going to 1 million. I'm going to start mining. And I thought it was super smart. And I had a buddy of mine who started BitVault with me. His name is Sharon. And we would go to these industry parks in Miami, right? And we would go and we would, find these little places. We would find out the power capacity and whatever. We go to the industry park and the guy was the first thing he asked me, he's like, what are you going to use this for? It's like, we're going to use this to buy Bitcoin. He's like, really? Let me show you. And he would show me 3 people in this industry park that, you know what they were doing? They were mining Bitcoin, right? So it's like, and why? Because everyone thought they were going to get rich, right? Bitcoin mining is the best in the bull market. It's so easy. You buy a machine, you make your money back, especially if you have low electricity, you make your money back in less than a year. You're a genius, man. You think you're going to run this to the next year? But what no one ever takes into account, and I'm calling out the people that also do the mining predictions, right? They're like, look, you buy your machine now, you're going to make your money back in 6 months, 8 months. You're a genius, bro. What none of them take into account, what if the price of Bitcoin goes down? Because if the price of Bitcoin goes down, here's the thing. Not only are you going to mine less, but the actual value of your miner is going to be worth less as well. So the ability to cut your losses and sell that miner, right? You're like, okay, let me just sell that miner. It diminishes with the price of Bitcoin, right? So anyways, Bloomberg, almost $4 billion in Bitcoin miner loans are coming under stress. The prolonged slump in Bitcoin is making it more difficult for some miners to repay the up to $4 billion in loans they have backed by their equipment, posing a potential risk to major crypto lenders. Now, here's the thing, guys, okay? I cannot believe that these crypto lenders lent out $4 billion so that people could buy machines that are completely dependent on the price of Bitcoin. That is insanity to me. Anyways, a growing number of loans are now underwater, according to analysts, as many of the mining rig lenders accepted as collateral have now halved in value along with the price of the world's largest digital token. Few miners have defaulted on their loans so far, but recent sales are showing signs of distress. Core Scientific sold more than 2,000 Bitcoin in May to help cover operational costs. By the way, that's totally normal, especially in market downturns, right? Meanwhile, Bitfarms, well, we had the guy from Bitfarms, Phil, on the show, the Canadian. Bitfarms offloaded nearly half of its mine tokens earlier this month to pay down part of its $100 million loan with Galaxy Digital Holdings. It has also taken out another machine-backed loan from New York Digital Investment. If the market doesn't improve, analysts warn it could be an ugly scenario. Selling Bitcoin reserves puts further pressure on prices, and the cost of equipment could fall even further if lenders looking to recoup their losses on defaults start liquidating machines they repossess. The value of Bitmain's popular S19 mining rig is down about 47% from a high of roughly 10,000 in November, according to data from Luxor Technologies Corp. Bitcoin miners, broadly speaking, are feeling pain, said Luka Jankovic, head of lending at Galaxy Digital. A lot of operations have become net IRR negative at these levels. Machine values have plummeted and are still in price discovery mode, which is compounded by volatile energy prices, limited supply for rack space. Loans for upgraded machines via traditional finance could be hard to come by. No shit. or included high interest rates given the market's volatility. To fill the void, native crypto lenders such as Galaxy Digital, NYDIG, BlockFi, Celsius Network, Foundry Networks LLC, and Babel Finance, BlockFi, Celsius, and Babel all paused withdrawals. Begin to accept, or I don't know if BlockFi has paused withdrawals, but they're definitely asking for a bailout from Pomp and FTX. Begin to accept rigs as collateral in addition to cash down payments. But now these lenders could be significantly under collateralized, said Ethan Vera. We also had him on the show. They are nervous about their loan books, especially those with high collateral ratios. Foundry declined to comment while NYDIG, Babel, and Celsius did not respond to requests. But the reduced income still impacts their businesses, as some of them have had loans to repay and collateral to post for their machine purchases. These payments might be hard for them to make without selling a significant portion of their Bitcoin holdings. Now, here's the thing. Are these miners stupid for getting free money? No. Are these lenders stupid for making those loans? Absolutely. I didn't know this, but if I knew that, you know what, Phil, though? Back when we were in peak bull, there was a gut feeling of mine that said, the excitement I'm seeing is very reminiscent of the excitement that I saw in Bitcoin mining in 2018. Mind you, if you're on Bitcoin Twitter, I'm sure you remind us everyone and their mother was posting pictures of mining at home. That is exactly the same thing that happened in 2017, 2018. And I started, there's a lot of enthusiasm here, right? Oh man, I don't understand. They must have thought, I mean, I do understand. You just read in the fail, Phil. They must have thought that Bitcoin was going to continue to go up forever.
Dude, I know it sounds terrible, but it's the same thing as the people that bought Luna, that did that. It's the same people, right, that got involved with some of these other staking platforms offering, like, what is it now? Tron is offering 39% return. Like, wait till that shits the bed. You know what I mean? Like, these things are unsustainable. But it's when you're sitting there and you're getting paid, right? Like every week hypothetically you're getting paid. You haven't withdrawn anything. You're just seeing a number change on the screen, right? So you think, I just need to do this for like 6 or 8 months, and then it becomes a full-time salary. And then I'll just sit and, make a full-time salary by my money making money. And it's like, why are you getting paid for this? Where do you think this yield is coming from? Who do you think it's coming from? So at some point, it all collapses. But going back to the Bitcoin mining thing, right? You did say it. Like, I remember, like, when I bought my miner, and you even said to me, you said, Phil, if you're buying a miner, it's because you want to know more about Bitcoin. You want to learn. And I was like, yes. You told me, because I got an S9, and at that time it was like we had just had a massive drop in the hash rate. So I did get very lucky, and I was able to mine at almost a profit for a very short period of time. Okay. But for me, in terms of having a single home miner, it was a learning experience. But I think for a lot of other people, they get caught up in the hype. Right? They see the Bitcoin price going up and they think to themselves, it doesn't matter if it's going to cost me a couple of $100 for electricity. I'm going to make it back on the Bitcoin price. Listen, yes, this thing is volatile to the upside, but it doesn't just go up like a hockey stick. Like, it's not just like every single day it just goes up forever. I mean, that's not how this works, Anyways.
What blows my mind, and I still do not understand this, is how you get a multi 10, 20, 30, 40, 50 million dollar loan and your collateral is a Bitcoin miner. Like, that must be the dumbest shit I've ever heard. The miners are super smart. I would take that. That's a genius move. You want free money? Sure, I'll take it. No problem. Right? That is insane to me. That is absolutely insane. Now, here's the good news. If you want to get into mining, now's the time. Now is the frickin' time. As in, if you wanted to get into mining, the time was 2018. right? It was after that the whole destruction happens, right? We haven't even seen the hash rate collapse yet, but it's coming, baby. It's coming. This is
hash rate collapse.
This is the time. And again, like Phil, I see a domino effect, right? And you could kind of see how all of this is interconnected. Phil just did a great part on the BlockFi stuff. BlockFi's name popped up in that Bloomberg article, and you know it. Now you know why they're freezing those withdrawals, baby, because they're collateral are Bitcoin miners that get absolutely crushed when the price of Bitcoin goes down, right? But if you're smart, this is when you get the best deals. And you might not be profitable. Here's the thing. You might not be profitable, but if you keep that baby plugged in until the beginning of the next bull, you are going to feel and look like an absolute genius, right? And here's the best part, is that if you buy now, you could sell it later. And you could recoup a lot of what you invested in it. And if there's a mania, which is insane, right? You could recoup all of what you invested in it, right? So yeah, man, if you're looking to get into mining, now's a good time. Prices might be better 6 months from now, depending on where the price of Bitcoin is. But still, like, this is like trying to catch bottom, right? You're never going to know when exactly it is. But this is the time when everyone gets scared. The industry miners are getting wrecked. Man, oh man. Dude, I need to talk to those lenders, bro. I need to talk to those lenders, get some of those loans, man.
Anyways. They did not do their due diligence.
Man, no, but it's like, dude, like, Phil, don't you see, like, you're watching shit that happened in the traditional financial system happen in crypto, but accelerated, right? Like, what happened in the traditional financial system over 100 years, right? The Great Depression and all of that stuff, it started happening. You're seeing it in crypto happen all in one go. And because there's no regulatory guardrails, right? Because people think, oh, it's crypto, it doesn't apply here. The same things are happening that happened over there, and no one is learning their lessons, right? But if you're the hodler, none of this applies to you. You don't get affected. None of this affects you. If you stay humble, stack sats, take it into cold storage, this does not affect you. In fact, all of this degeneracy presents an opportunity for you because you're getting cheaper sats, you're getting saps on a discount, and if you want to get into mining, or just buy an S19, keep it at home. This is the best time. You're going to get a deal. It might not be profitable, but think about it this way. You subsidize it maybe for a couple months, maybe for a year. I promise you that it will be profitable in the long run once you look back, right? Especially if you get in now. The worst time to get into mining, and I did call this many times, would have been 6 months ago. Because the prices made absolutely no sense, right? Anyways, Opti, what are your thoughts, brother?
I don't have too much to add, but I just wanted to echo, I guess, the same thing that Nico said, is essentially, redoing fiat things, and Bitcoin exposes it at an accelerated rate. And and then, of course, man, bullish on new miners. Nico giving you guys all the alpha. So if you're in that position, man, bullish on joining the network.
Yep, bullish. And if you got into mining last year, hold on.
So that article said miners were what, 10K then? I just looked it up. S19 Pros are going for 66,400.
Yeah, do know, but you're getting them in the 3 and 4Ks. Like, I started getting messages from people. Hold on, let me see if I can find it.
They're still going down. Wow.
Oh, dude, this is just getting started, my friend. Yeah. This is just getting started. Hold on, I started getting.
Imagine all those people that took loans out to buy them, man. That's just nuts.
Dude, I started getting. Hey, Nico, are you in the market for ASICs? We're seeing lots of distressed opportunities with new gen equipment in the high 3s and low 4s.
Dude, I remember looking it up, and they were like 13, 14,000 for the 19 Pro S19s.
It's like people don't learn. This is exactly what happened in 2018. The same exact, like, what I got the same messages. I'm getting the same ones, and sometimes from the same people.
So they're not learning.
They didn't learn the first time.
They didn't learn a damn thing.
Because it's easy. It's easy to get caught up, man. Imagine taking those loans and whatever, dude. if I was in that position, I would have definitely taken them. But I learned from 2018 and 2019 were brutal for me. I had to go back to work in my fiat job because of how brutal it was. And I learned, right? And you the best way to learn, which is what I was talking about during the BlockFi segment.
Feel the pain.
The best way to learn is just to fucking totally wreck yourself and then be like, okay, this isn't a viable business model, or that maybe this isn't a good, decision, right? So yeah, man. But anyways, for the hodlers, cheaper sats is a great opportunity. And if you're looking to get into mining, this is a great time. Again, what Phil said in the beginning, have the mindset of this is for education rather than I'm going to get rich. That's not the mindset that you should be having. The mindset is, let me get an S9, let me get an S19, plug it in, get a feel for it, see if you like it. Some people don't like it, right? And then if you think about, if you like it, then think about expanding, right? The hardest part about mining is not buying the machines, sourcing machines. The hardest part about mining is finding cheap electricity. That is the hardest part. If you're able to do that, you have a business, right? And apparently now you have people willing to lend you $100 million to do it. But anyways, Phil, it's time for it.
The Daily Meme Review.
Brought to you by Citadel 21. They make the best Bitcoin cultural zine. It's stories, articles, comics by actual Bitcoiners. This is the artwork for Volume 10. This is the artwork for Volume 11. And this is the artwork for Volume 2. Volume 2 is almost sold out because there's only 1,000 physical copies made per volume. Get your prints of Citadel 21 today before they run out. All right, everybody. First meme is brought to us by Vandelay BTC. Whoops. I saw 742,377 futures for BlockFi. How many without SBB effing pump and Yusko? None. Oh, man. All right. Next meme by Giacomo. Definitely.
This is a reader. This is a reader.
Let's check it out. Same tweet, meme vision. It's the NPC cringe face and then the Chad guy. The NPC cringe, the guy like freaking out, is saying, you have to stop running Bitcoin and run my altcoin that dilutes your current share of the total supply instead, so that some rando you don't even know can wait fewer blocks to confirm sales of goods and services on chain in the unlikely but possible scenario where block space demands doesn't grow much after 2140. And then the Chad said, cry harder. Right. Anyways, here's Carl Menger. Me and my Bitcoin. By the way, thanks, Carl, for saying what you said about the show. Really appreciate it. Me and my Bitcoin. LOL. Me and my Bitcoin. The fucking inflation. And it's the Grim Reaper knocking on the door and the guy sneaking out the back for our audio listeners. Anyways, here's Abelito Panama. When bear market hits, shitcoiner, Bitcoiner, fiat, bro. It's true. Is what I've been saying the entire show, right? If you're a hodler, if you stayed humble, you're stacking sats, these prices present a discount to you, brother. All right, here's Labber Hodl. Remember, the bull market is with all the shit coiners, all the people and whatever, they all feel like fucking geniuses. They're riding high. But it's these bear markets, man, that the Bitcoiners shine. Anyways, Bitcoin time chain, shitcoin blockchain. All right, next one by the legendary Lena Seish. Also, I love her meme. She does it all by hand. I'm not sure about the Bitcoin thing. Check this out. I just bought this. You did it. Why didn't you stop me? Why didn't you tell me to buy earlier? Oh my God. Did you tell me to buy? I'm a genius. Oh man, and it's true, right? It really shows what I was saying, right? That during the the bull markets, a lot of these shitcoins outperform Bitcoin, but it's the bear markets that they get crushed, right? And they never make it to all-time highs again. It only happens that one time. All right, the meme factory world right now. It's the Titanic sinking, and the memers playing. They're the bands on the Titanic playing the music in the famous movie. Anyways, awesome memes. And for those awesome memes, Phil, I'm going to give it this 3D printed custom Crypto Cloaks case that I gave to my girlfriend. But
that you've already given already.
I know. But this time it's different because I took a bag of screws outside of the note case. I knew
Toxic Cat knows all of our scores.
I knew he was going to say that.
Pay attention.
I knew he was going to say that.
One of our scores. You can't get away with anything here.
I changed it up. Anyways, Phil, what would you give those memes?
Well, I'm going to give it something I haven't given it before, for sure. Okay? For sure. And that is...
So he hopes.
I hope I do. No, but I know for sure I haven't. This is my Rip and Dip Alien Stress Ball.
Alien Stress Ball!
Alien Stress Ball, see?
Opti, what would you give those memes?
It's still mint. So Phil
He
must
gets
not be
it, it's in
stressed
the
at all because
package.
he doesn't use it.
All right, great memes, great scores. I am going to give it this lacrosse ball that I use to roll my back and my feet out. Life hack, guys. Life hack.
Lacrosse ball. I use the strong yoga ball that does the same thing, but the lacrosse ball is even harder. That thing's hard as F. Anyways, Toxic Cat.
All right, I got this in Miami. It's a Bitcoin like bling chain.
Nice!
That is the most
can't see
Fiat chain I've ever seen.
I printed one of those. I mean, not that exact one, but dude, that's awesome.
But no, you got it. I got it for free. You had to do like a fold. It was the fold.
Oh, that's what you got?
Team.
I got I got 5 sats from that spin.
Yeah, we got like 5 sats and a pin.
No. So around in the conference, inside of it, there was like blocks that you had to find. They were like on the pillars, and so you had to scan the QR code. And once you found all 21 blocks, that was your reward that you got for doing that.
You spent the time doing that?
I spent an hour walking around doing that.
That is proof of
Well,
work.
I couldn't find you guys.
That is proof of work.
You guys instead.
That is proof of work right there. Wow. Okay. Wow. A lot of respect, Toxic Cat. Interesting. All right, guys, for our audio listeners, stay tuned for after the show because Opti is hosting right now a live Twitter Spaces, and he's going to do Q&A. Go definitely check it out. And, of course, make sure to subscribe to us on alternative video platforms like Rumble.com and our personal favorite, Bitcoin TV, and join our Telegram group. It's a party in there. You can post memes to review. We can review them on the meme review. Really cool stuff. Anyways, Phil, there was an open source software release today. Why do you tell everybody about it?
Software releases. Brought to you by CipherSafe. Check them out, cyphersafe.io. You got to store your seed in the best possible medium. Store your seed in steel, like the Cypher Wheel or the all-new Cypher Grid. They both come with a tamper-resistant wire, and the grid comes with a punch tool. All right, we've got Mercury-wallet version 0.7.4 that was released 2 days ago. Check it out. The link is down below. Don't forget to check us out on our audio-only platforms, Apple Podcasts, Spotify, and Anchor. If you want to stream us sats, check us out on fountain.fm. You could stream us sats through Breeze.
Awesome. Thank you, Phil. All right, guys, before we go, I want to give a very special shout out to the legendary Pirate Beach Bum. Check out Bear Market Diaries. He just interviewed the Space Cat. He's about to interview Frito 2X. I also want to give a very special shout out to our clothing sponsor, RepresentLTD.com. Phil and I wear the clothing every day. Optimus is wearing it. He's wearing the decentralized hoodie. I'm wearing the Represent hoodie. Phil is wearing the Maximoff hoodie. He makes Bitcoin. He's making Bitcoin merch. He's making Simply Bitcoin merch. It's comfortable. It's stylish. Check out RepresentLTD.com. And you can take advantage of the promo code down below. So I want to give a very special shout out to our awesome guests, the legendary Optimus Fields, the master of mayhem behind the Simply Bitcoin Twitter account, and of course, Toxic Cat. We will put their Twitters down in the link description if Phil remembers. Guys, that was our show. If you enjoyed the show, you know what to do. Smash that like button, smash it, smash it. And of course, if you want to continue hearing the Bitcoin news, the memes, the fails, all of it, definitely consider subscribing to Simply Bitcoin. And we'll see you tomorrow, guys, for a brand new episode.
To quote our awesome guest, if rehypothecation didn't cause the financial crisis, BlockFi, how did it cause yours?